So hello everyone, we'll get started. My name is Carla and welcome to today's webcast on inventory controls and period end procedures. Just a bit of housekeeping before we begin. You will have the opportunity to submit questions by typing them into the question pane anytime during the presentation. We will address them at the end. We will also be recording this webcast and we'll send it to all attendees. And now, for those that did not join us last week, I would like to introduce today's presenter, Diane Mueller. Over the past 25 years, Diane has touched many lives as a leading authority for all things related to small business and bookkeeping. She is a co-founder of the Institute of Professional Bookkeepers of Canada and is the owner and operator of bookkeeping firm Soma Small Solutions. Diane is also a SAGE certified trainer and has received countless awards throughout the years, including at tomorrow's SAGE Circle of Excellence Awards, where Diane will receive the inaugural Alan Salmon Lifetime Achievement Award for her tremendous contributions to the SAGE community. Diane, the floor is yours.
Well, thank you very much, Carla. As you were saying that, I could just feel my body getting super excited about tomorrow night and what an honor it's going to be. Hopefully, maybe I'll see some of the attendees at the event tomorrow. But thank you all for coming and welcome back for those that were with me last week. And again, my name is Diane Mueller, and I get to be your tour guide today for part 2 of the SAGE 2-part inventory webinar. Today, it's all about inventory control and our period ending procedures and some of the new features that have just been released in the latest Sage 50 file, Sage 50 Cloud file. So what are we going to be covering in the session today? Well, mostly about controlling your inventory levels and best practices for helping you do that. We'll also look at all of the new features that have been released in 2019, Sage 50 Cloud, the delivery orders and the goods received notes, the credit and debit notes, and we'll spend some time in the report center looking at some of the reports. We can't see them all today, but a few that will really help with period ending for inventory adjustments and transferring of inventory between warehouses and locations. So let's start with workflow and how the various steps within a inventory workflow will help you manage your inventory and your cash flow. Best practices in a company is to have control over what the company is purchasing and who is authorized to purchase the inventory. Issuing purchase orders to suppliers helps with this. As you can see on the slide here, I've got a list of the numerous pending reports that are available to us in the report center under the payables and the same list under the receivables. This is going to provide what inventory is expected to come in and the estimated date. If we record what inventory is spoken for by our customers because we've used sales orders, we're able to manage our inventory levels more effectively. It's also going to help us with cash requirements that we need in 30 days to pay for the inventory received. And when we run the cash flow reports available to us in Sage 50 Cloud, it does take into consideration ending any pending purchase orders, goods received notes, or delivery notes, or pending sales orders in that cash flow forecasting report. So I think you can all probably know where to go to find these, but it is in the report center under payables, if you're looking for the pending purchase orders and goods received notes, and under receivables for any of the sales orders or delivery notes that are still outstanding and pending. Okay, so some of the new features that have been released in Sage 50 Cloud 20.19 or 2019.1 and 2019.2 are credit notes and debit notes, goods received notes, and delivery orders. So one of the things to note is both the goods received notes for vendors and the delivery orders for customers are available to those using the premium or the quantum version of Sage 50 Cloud on a subscription base. So you have a monthly subscription to Sage 50 Cloud. If you've received goods from a supplier but receives the invoice at a later date, you can now record the inventory increase using a goods received notes. This allows you to update your inventory quantity and value, making it much easier to track the stock levels, and enables the received goods to be available in other transactions, for example, a sales invoice. When the invoice is received from the supplier at a later date, the goods received note is converted into a purchase invoice with just a few clicks. Delivery orders work the same way, but they're relevant for the sales or customer sales and receivable module in Sage 50 Cloud. It allows you to record the delivery of goods which have not yet been invoiced to your customer. When a delivery order is recorded, your inventory quantities and values are updated, or in this case, decreased, making it easier then for you to be able to keep track of what your stock levels are for selling the amounts that you have in stock. So the first thing that we need to do is to make sure that we've turned on these features. And in the settings under features, we are able to turn these various options on. For the seminar today, I've turned on purchase orders for vendors, goods received notes for vendors, sales orders for customers, delivery orders for customers, and I also put a check mark beside packing slips for customers, just so that you're aware that you can also print a packing slip for the warehouse. But again, don't forget, goods received notes for vendors and delivery orders for customers are available to those using the premium or the quantum version of Sage 50 Cloud under a subscription-based version. Another feature that is fairly new, actually got released in 2019, is credit notes and debit notes. And these are used to adjust quantities without adjusting or modifying the original invoice. So if a mistake was made on the original invoice out to your customer, you can now issue either a debit note or a credit note to that customer with an adjustment of quantity and the amount, be it less items or more items that you have originally invoiced them for. So for example, a customer returns a product or reports that for whatever reason they did not receive all of the products invoiced, a credit note would then be issued to that customer, adjusting for that quantity and the amounts that they did receive. A debit note might be issued to a customer because they were not invoiced for the right amount. They were shipped 10 items, but only invoiced for 8, for example. Debit notes will increase the quantity and amount invoiced. A vendor may also issue your company a credit or debit note to adjust an invoice up or down by the quantities and amounts. In the past, we would have entered a negative invoice for this type of transaction, but now we can use the new credit and debit note to adjust and not have to go back and enter a negative invoice or reverse an invoice and do a new invoice. So credit notes and debit notes are really going to go a long way to help us manage the inventory and also our invoicing. So one of the best practices that I spoke about before, or workflow when you're dealing with inventory, is to actually issue out purchase orders to your vendors. From the purchase order, we would then be able to convert that purchase order with just one click to a goods received note. And then once it is a goods received note, we can then, with one click, convert it into an invoice once the invoice has been received from the vendor. So this all goes a long way to help manage inventory much better. Once turned on or activated in the settings, you'll need to also create 2 new accounts in your chart of accounts and then link them in the payable settings in order to set up goods received notes. The first one that you create in your chart of accounts should be uninvoiced goods and services account. And the second one should be a gain or loss when invoiced account. So uninvoiced goods and services linked account will be used when a goods received note is recorded to update the inventory on hand, and it will then be zeroed out when the goods received note is converted into an invoice. The gain loss account that you will link will be used to keep track of the gains or losses that occur when the amount invoiced differs from the amount on the goods received note. So these 2 accounts must be created in your chart of accounts and then linked here, as you can see I did in the settings under the payables. Now, the tax amounts that are eligible to be claimed as input tax credits will be recorded only when the goods received note is converted to an invoice. And the same thing applies on the other side of the ledger when we talk about receiving sales orders from your customers. So the normal flow, again, workflow would be to create a sales order when you receive that purchase order from your customer, then convert it into a delivery order if you're going to be sending out those goods before you actually create a customer invoice. And again, each one of these can be converted, no need to actually re-enter anything. Now, on the sales side of the ledger, we have delivery notes or delivery order notes. Delivery order notes can be created from scratch or converted from a sales order and then from a delivery order to a customer invoice. So this would be a normal workflow. But if you choose not to use sales orders or delivery orders, then you could go, of course, directly to an invoice, or if you choose not to use sales orders, but you will use delivery orders, then you can create a delivery order from scratch. So nothing stops you from choosing the way that you want to handle the inventory and use these 2 new features in Sage 50 Cloud. Now, recording the delivery orders notes are for when you have not yet invoiced your customer. So the inventory quantity and the values are updated in your tracking of your inventory items, making it much easier than ever before to keep track of your stocking levels. Again, once activated or turned on in the features, you will need to configure 2 new accounts on your chart of accounts for the delivery order note processing. The first one will be uninvoiced goods and services, which will be used when a delivery order is recorded, and then it will be zeroed out when the goods are actually invoiced or when that delivery order is converted over to a invoice to your customer. The second account needed is a gain or loss when invoicing with delivery orders. And it will be used to keep track of the gain or loss that occurs when the amount invoiced differed from the amount that you had on the delivery order. For example, perhaps you're not going to be invoicing all of what you shipped out to the customer on that particular invoice. So making sure that you have those accounts created on your chart of accounts, and then linking them up in both the receivable module and the payable module is the process to get started to use these two new features. Now, this was done in accordance with the adoption of the International Financial Reporting Standards. Revenue from contracts with customers in one of the articles, number 15. Revenue is recognized when the customer has control of the goods or services. So therefore, it is a requirement to have the delivery order issued. But sales tax is only recorded at the time of the invoicing. So remember, the tax is not recorded on the delivery order or the goods received notes. These amounts will be collected on behalf of a third party, like the CRA, or in the case of provincial sales tax authorities, and they are not recognized at the time of delivery. They are only recognized at the time of being invoiced. So let's take a look at how this works in actually Sage 50. So I'm just going to bring up Sage 50 here. And hopefully everyone can see my Sage 50 screen. Carla, can you perhaps confirm that for me?
Yes, we can see it.
Thank you. So inside the file here, I'm going to go up to my payables, just using the navigation bar here on the left-hand side, and then I'll go into purchase orders. Now I've created a purchase order ahead of time for the class today, just to be a little bit more efficient with the time. So I'm going to recall a recurring purchase order that I have here. And here's one for Landscaping Depot, and I will select it. So this is a purchase order that I will now be able to convert into a goods received note, so that I would be updating my inventory, because I have received it in my warehouse and I want to make sure that my records are accurate and be able to sell out on a sales invoice these particular items. So all I need to do is to go down and convert it. Now the convert button is just at the top here, right beside the word purchase order, and I can convert this into a goods received note. You'll also notice I could skip that process if I chose to and convert it right to a purchase invoice. But we're going to go through the process here of a goods received note so you can see how that works. Now I'm going to mark down what I actually did receive, and I did receive everything that I was supposed to receive. So just go down the list here. And now I want to take a look at my report, or my Control J, so that I can see what is actually being affected. Because we all know that when I issue a purchase order, nothing is affecting my accounts. It's only a purchase order at that point. But now that I've gone into my goods received note, and to comply with the new rules and regulations, I'm going to issue a goods received note. And here you can see that I have updated my various inventory accounts. And in my linked accounts of good received not invoiced, the total is going to be credited. You'll note that there is no sales tax being recorded at this point. And when I convert this goods received note into an invoice, then I will be debiting my account 2050 goods received note not invoiced to zero it out. So let's go ahead and post that. Now I'll go into my goods received notes here and convert to an invoice. So I need to find it. So it's just the same way as we used to find our purchase orders. I can go searching and use the criteria here, use the number, and I think it was actually number 1, but it'll probably show up right here. Yeah, there it is. Easy to get to, and select it. And now here is my good received notes. Now I could have run a report at that time on the reports that I showed you a few minutes ago, and it would tell me what I have pending good received notes. So again, it's really about the increase in the ability to manage inventory and cash flow that these brand new features in Sage 50 Cloud have now made available to us. So at this point, I'm going to do the same thing. I can just convert this now into a purchase invoice. Once I've received the goods, they're in my inventory, and now I've also received the invoice from the vendor. So it's now at this point when I do my Control J and look at my report that I see my account 2050 good received notes being debited, where when we converted it from a purchase order to a goods received note, it was a credit of $1,700. And now at this point, my HST, GST, whatever is applicable taxes in your particular province will be affected and posted to the correct account. And in this particular case, the vendor is giving us terms, so it's going to credit the accounts payable. There is no need at this point to affect my inventory accounts because that was already done. My inventory was already updated when I converted from a purchase order over to my goods received note. And then just put my invoice number in from my vendor, and I can go ahead and post that. So now let's go to the receivable side. And here the same thing applies. I have chosen to actually put all of my sales orders in. So I'm going to open up my sales order, and I think I have a recurring one in here for us. And here's one here, sales order. And now I'm going to convert this sales order. Actually, no, I'm going to choose a different one just because of the products that are on here. 2 seconds here. Here we go. And I'm going to go ahead and convert this one to a delivery order. And now when I take a look at my report, I better first say what got delivered. And in this case, I can put everything in and take a look at my Control J or my behind the scenes accounting. And here you can see my asset account 1570 uninvoiced delivery orders is being debited $600. My inventory is being updated, as you can see here, and my sales accounts are being affected along with my cost of goods sold, but no taxes, no sales taxes of any kind. And I could take a look at my reports, and this would be listed on my report. So I can say post. And now I can go back to my delivery orders and choose that. And I'm just going to bring this, restore my window so you can see that a little bit better. There we go. And now I'm going to convert it into a sales invoice out to my customer, South Pine Senior Center. And if I look at my report, again, no inventory is being adjusted, but my 1570 uninvoiced delivery orders is being zeroed out with a credit. My accounts receivable, because this client also has terms with us, and my taxes, whatever is appropriate in your particular situation, is being posted at that point. And I can go ahead and post that. So as you can see, hope I've done a good job at demonstrating exactly how both of those brand new features work. So the other thing that we want to talk about is adjustments and transferring of inventory. These things happen often throughout the year, but particularly at period end, to make sure that your financial statements do represent exactly what you have in inventory and what your cost of goods sold account should look like. Oftentimes, we're doing a physical inventory. I want to show you a report that can help you do that, that is built right inside Sage 50 Cloud. So if I go up to the top of my screen where it says reports, about the third one down, you can see Microsoft Office documents. And that opens up a window where I'm able to print out a physical inventory worksheet. And this worksheet's fantastic because what it will do, and I'll just open up here so I can show you what it looks like. 2 seconds, I'm just going to drag it over to my other screen here as soon as it stops calculating all the inventory. 2 seconds. Just want to show you what it looks like because I find that I have customers that really love this report. It's going to let me drag it over? Maybe not. Oh dear, it's not going to. That's too bad. Anyways, you can go into one of your files, Universal Construction, and the sample file, and run this report so that you can take a look at it. But it's great. It shows on that report all of the information that you need. It tells you what your minimum level is, what you have in outstanding sales orders and goods received notes. It also tells you what the actual inventory level is at the time that you're running the report, and gives you a column to go back to your warehouse, count that item, and put that in the column so that when you come back into the office, you'll then be able to adjust your inventory for exactly the correct amount. Okay, close it over here first. Sorry, didn't need to throw a wrench into this, but I guess opening it up inside of the webinar was not a good idea. Please go away. Come on, close, close. Okay, there we go. So back here in Sage 50, I'm now going to go over on the left-hand side on the navigation pane to inventory and services and talk a little bit about how you do adjustments to inventory. So you can see the icon here in the task window. So I'll click on the inventory adjustment and transfer window. If I had actually clicked on transfer of inventory, I would have got to exactly the same window. The difference is just the drop down here. I can move between the two. So in this case, we're interested in inventory adjustment. I'm just going to make this nice and big so hopefully you can see it. So the source may be that why I need to write this off might be the bags ripped in shipment, for example, in shipping. And the date that I want to do that's important, of course. And you can put a much longer description in there or comment as to why you're doing it. But then what I'm going to do is to actually write off 5 bags of soil. So when I click into my inventory, I can search again by number or by description. And it's real easy. We don't have a lot in this file, so I'll pick the soil 25-pound bag and select it. Now it tells me the unit cost that I pay for that soil is $7. So that's what the cost is that I'll be writing off for each bag. So when I put in here the quantity, I'm going to put in a -5 because I want to reduce my inventory by 5 bags. And you can see that it's going to the linked account that we linked last week when we were setting up the inventory and linked up an adjustment write-off account. But for example, if that wasn't the reason for me to write off this 5 bags, that I was actually perhaps giving them away for promotion, there's nothing stopping you from actually changing your write-off account on the fly when you're doing it. So if I wanted to write this off for promotion, then I could do that by just searching for my promotion or advertising account and choose that account. What you should not be doing is doing invoices, sales invoices for 0 amount to reduce your inventory. That should all be done here in the inventory adjustment screen. And then I can see from my report here that it is going to debit my, in this case, advertising and promotions, $35, and it is going to credit or reduce my inventory account, landscaping materials. If that was my write-off account that I had chosen to use instead, be my adjustment account for write-offs, then you can see from my report that it would then be debiting my adjustment or write-offs. And you can go ahead and post that adjustment. Now I'm going to switch the actual drop down here to say transfer between locations. And it brings up another screen for me. I'll just restore this window again so you can see all of the columns, allowing me to transfer from one warehouse to another warehouse, which is common practice, of course. The other thing that it allows you to do, and I think I mentioned this last week, is if you want to ship directly from your supplier to your customer, then you could set up a drop shipment warehouse, which would allow you to do that also. So I'm going to change this to from my main location to my north location. And in this case, I'm going to transfer 25-pound bags of soil and the date, and then you can put a longer comment in there. So the item that I'm going to choose to transfer is 25-pound bag, and I'll transfer a quantity of 2. The unit cost is $7. That comes out. So the total amount's $14. But look what happens when I look at my behind the scene accounting and display the journal entry. Absolutely nothing, because there's really nothing happening here as far as having to adjust my records or my financial statements for this. There's no money that's being moved at this time. I'm just taking the inventory and moving it to another warehouse location. So that's how you go about transferring between various locations. And you can go ahead and post that one. When we're doing year-end or period-end adjustments, the other thing that we'll want to take a look at is what's been happening in our inventory during that period of time. And there's, again, lots of great reports in the report center under inventory for you to take a look at. Your statistics reports, sales summary reports, sales detail report, transaction summary reports. All of these reports are fantastic for giving you information. I even have an inventory adjustment journal entry report that I can bring up after I've done all of my adjustments, just to check it over and make sure that they were all done. But I want to just take the time to show you a few other reports that are also inside of your Sage 50 Cloud product and are very useful. And those are under the reports on the front screen here. When I go down to my business reports, you can see that I've got a bunch of specialized reports in here that are fantastic. It will give me the opportunity to do a product analysis report. Things like, what were my top 20 sales? What items did I sell the most of? What were my lowest ones, bottom items? So perhaps I will think about clearing out what I have in inventory and not ordering those again because they're not good sellers. You can choose by the date range, rank it by revenue, quantity, profit, or return on investment. On your customer list, and include one-time customers or not. You can even include items with no transactions so that you can really see the inventory items that are perhaps stale and not moving. And then, of course, by selecting all of your customers. Down at the bottom, you can show this information by location. So perhaps something is a good seller at one of your locations, but it's not at another. So then you could make that decision to transfer everything that you have left in one of your locations over to the location where you are able to sell it. So again, managing that inventory, these reports are fantastic to help you do that. And then the other report that I like is right underneath the business reports, forecast and analysis. And if we go down to the analysis, I'm able to do a product analysis. And similar things, but this time it's going to actually allow me to choose a little bit more information here, like which ones have, what are my profit margins like in the top 20 products that I sell, for example. And again, I can include locations or not, select all of my customers and say, okay, and then I get back some pretty cool reports about what's going on with my inventory. So I wanted to make sure that you were really aware of all of the inventory reports that you have available, because managing inventory is really a big part of any company that does buy and sell inventory. So I'm going to ask Carla to do a poll question now for us, just to see if you guys have been listening. Carla, can you bring the poll up for us?
Yep, it should be up very shortly. It says distributing poll.
Okay, wonderful. So the question says, when processing a delivery order note or a goods received note, what accounts are affected? And our options are A, nothing until you convert it to an invoice, B, revenue or expense accounts only, or C, all general accounts that are appropriate except for the sales tax accounts. So if you could let us know what your answer is, A, B, or C. Okay, that's wonderful. 75 oh no, it's going up. 83, 85, 88, 89. This is exciting. Good. Oh, that's perfect. Everybody was listening, and you all know the correct answer is C. All the appropriate general ledger accounts will be affected except the sales tax accounts. They will get affected only when we actually convert it to an invoice, which is, again, according to the new financial standard records. Okay, so now we've got some time, a good amount of time, because last time on our session, we ran a bit short and didn't get a lot of questions answered. So I thought this time I would leave a few more minutes to answer any questions that you might have on anything that we actually covered in either last week's session or today.
All right. So the first question we have is from Joanne Kaepernick. She's asking payables. In goods received, why was the linked account for the gain loss when invoice linked to a revenue account instead of an expense account?
So that was on the delivery orders side because they had received goods, Joanne. In the payable side, it is linked to a liability account.
Okay, next question comes from Wendy Joyner. Can you create a customer invoice from multiple sales orders?
Unfortunately, Wendy, no, you cannot. If you're going to create separate sales orders for each one of the purchase orders that your customer might issue to you, then those sales orders are going to be handled separately and invoiced separately. Otherwise, you have to combine all the items on one sales order.
Next question comes from Lacey Sentner. How do you record the duty percentage on inventory?
Okay, I thought you might actually ask that because there was a few questions last week on it. So what I've done is just already have prepared a slide or two on landed costs here. So let me just go over that process quickly for you, Lacey. If you purchase goods from a foreign supplier and know what you are charged at the border for duty, Sage 50 Cloud can help you provide a more accurate landed cost. You will find in the payable settings an option called duty. So let me just bring that up on the screen for you. So in the payable settings, you can see there is an option here called duty. And I have created a duty clearing account, which is a liability account, and turned on to track duty on imported items. So that's the first thing that you'll want to do. And the liability account is used as a type of clearing account when the invoice comes in. So when you enter a purchase invoice with items that have been marked with duty, and a percentage amount in the inventory record. So now we have to go over to the actual inventory and pull up a item. And then in the taxes tab is where you will find the percentage that you are charged on duty for that particular item. So you would put your duty in there. Once you've done that, then when you receive your duty invoice from the custom broker, you will post it like all other invoices. But because the duty amounts have been recorded, you will use the duty liability account to post the credit to it. And when you bring in the payables, so here, and if I go into my purchase invoices, and I've turned on the duty for a particular vendor. So I'll pull that vendor up. Oops, sorry, no, I guess it's this one. Oh, perhaps I didn't turn it on. Just 2 seconds here and make sure that I've restored the window, because I've showed it to you. Oh, I didn't turn it on in this actual database that I'm using, but I'll go back here and show you what it would look like when you brought up the screen for the landscaping depot or whatever vendor it was that you turned it on for in the record, then you would see a duty column here. And if I had put 2% on this particular item, then it would automatically put 2% duty on it so that you would get your true landed costs on the purchase invoice. But it would not show it on the actual vendor invoice here. That would be the total amount that you owed to the vendor only. But it would post to the inventory account plus 2% duty. When you get your duty invoice from Revenue Canada, you would then post it to that liability account, which would then clear out the 2% that it was actually posting as this invoice was being put in. So hopefully that answers your question. Again, I'd encourage you to open up the Universal Construction and just play with that a little bit.
All right, I think that seems to be the last question. If anyone else has anything else, just put it in and we'll give it a few seconds.
Okay. What is the I'm seeing one. What is the difference between a credit note and a debit note?
Oh, I missed that
one. Okay, yeah. So I can answer that one for you too. So when we're talking about a debit note, it is typically a difference in what would be a good example that I could give you on the payable side. If I was invoiced from a supplier for 10 of something, and I actually only received 8 of the items, then they would issue me a credit note. And I could enter in the credit note so that it was reflective of the original invoice. So the original invoice went in as 10 I received, but then I would receive a credit note for that. If, however, it was the other way around, where I received 8, but they, the other way around, I received 10, but they only shipped, they invoiced me 10, but they only shipped, or they invoiced me 10 and shipped me 12, then they would be issuing me another invoice, or what we would call a debit note, to actually increase what I owed them. So all it is a way that you don't have to touch the original invoice, whether that is out to a customer or whether that is being brought in by a supplier. The original invoice stays the way it is, and then you're issuing an adjustment invoice, or your supplier is issuing you adjustment invoice, and whether that is up or down would determine whether it is a credit or a debit. So I'm hoping that answers the question of the difference between a debit and a credit.
Okay, I think our next question is a follow-up to the first one. It It's from Joanne Kaepernick again. So she says, in payables, the linked account for uninvoiced goods and services received is set to an asset account. The question is the linked account in payables for gain/loss when invoiced. Why was this linked account set to a revenue account versus an expense account?
I'm asking about the next one. So the two accounts that you need, let me just go into the settings and maybe that will help. But if I'm in the payables and I go into my linked accounts, here is my good received notes, because the good received notes, remember, is only on the payable side. The delivery orders are on the receivable side. So here on the goods received notes, my uninvoiced goods and services received is a liability account. And if there was a difference in my invoicing, the gain and loss would be booked to the revenue account. Whereas on the receivable side, on the delivery orders, my uninvoiced goods and services provided to a customer is on the asset account. Because I've provided those goods out to the customer, Joanne, then that means that it is an asset of mine that I have not been paid for yet. So it would be similar to having, a deposit out there. I hope, did I clear that up by showing you that? And again, on the payable side, I haven't actually been invoiced yet for these, so it's a liability.
All right. Next question comes from Wendy Joyner. The USD conversion in inventory. How do we deal with the exchange on the inventory? Does it show as the Canadian costs and the USD cost?
Well, if you've turned on multi-currency in your file and you have a US vendor that you're purchasing from or a US customer that you're selling to, then you would automatically be doing that. I think I have one US in here. Putting in the exchange rate here at the top right-hand corner for the day that you actually are entering the purchase invoice from the vendor. So it's handled here at that point. I think that's your question. How do we deal with the exchange on the inventory? Yes, so it's handled here. So if I'm putting an inventory item in, I'm putting that in at the US price because I'm buying it from a US vendor. And then the exchange rate is what it actually puts it to a Canadian, which is posted then to the financial statements. So this is where the conversion happens. That's correct. So the original
Wendy's
US
follow-up
amount,
question is, so the original USD amount is not in the system?
it is in the system if you were to bring back up this purchase invoice, but it is certainly not posted to your financial statements. So it's going to always be shown in Canadian dollars on your financial statements where your inventory sits. So your inventory is an asset, and that's going to be shown as Canadian dollars. And it does that here using the field in the top right-hand corner for the exchange rate.
All right.
If you bring this vendor back up, then of course you will see the US dollar amount here in the purchase invoice, because you can look at these purchase invoices after the fact, after they've been posted.
Okay. That seems to be the last question. We'll give it a few more seconds just in case anyone has a follow-up question. All right. I think we'll end the webinar. Thank you, Diane, and thank you to everyone for attending today's webcast. You will receive a follow-up email within a few days from now with a link to view a recording of today's session. On behalf of Sage, thank you very much for joining us, and we hope to see you at any one of our upcoming webcasts. Enjoy the rest of your day. Thank you.
Thanks, everyone.